Good morning, traders and investors. My name is Roger Scott, and I'm still the senior strategist for Wealth Press. I'm a little bit early today, but heck, why not? Want to be here for you guys so you guys get the most timely data in the fastest amount of time. The market's going to gear up to open up in about an hour and 55 minutes. That's right. Now, we've got the NASDAQ up, we got the Dow up, but I mean, after 700 point on the Dow to see the Dow up 58 points, that ain't pretty. We got to be very, 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 very careful right now. And for those of you who didn't believe me, who thought we were going to go higher, I want to show you guys something very, very interesting. Do you remember when I showed you this right here? And I said, algos taking us out right back down? You guys do. Of course you do. If you don't, go back to that video. The date of the video is December 13th, just for reference. But then, right here, when the NASDAQ was breaking out, and this happened on the 15th, only 7 days ago, I was telling everyone, be careful, this looks like another false breakout, and then look at what happened. Look at the SPY. The SPY never broke above that level. The NASDAQ did. Not enough market cap. The bigger index that has more market cap stayed true to the support resistance level. But the QQQ, look at that. That ain't pretty right there. That ain't pretty. And that suckered in a lot of traders. Now, we're getting to the 200-day moving average. And the Dow is near its support level. So I'm thinking maybe just a little bit more downside and maybe up or maybe up from here. But I think the downside is limited because I don't see any major catalyst to go down or up at this point. So I think the market is pretty fragmented. And also, just to give you an idea of how fragmented this market is, look at this: communication services, consumer discretionary technology. They're not supposed to be this far apart from each other. If they're this far apart from each other, that's a problem. That's a major issue. So I think we're going to see a little more corrective action before it's all said and done, at least with those sectors. And I'll go into sector analysis in a bit. Now, we've got FOMC minutes today, and we've got John Williams speaking. And in my opinion, John Williams is going to reinforce the fact that the Fed has to take further action. And if you look at the bond market, and we have been talking about the bond market, you will see the bond market's also near its support level. So everything is kind of showing, like, look at the Dow and look at the bond market. They both look like they're at support, and they both look like they kind of want to go up a little bit, but I think there may be a little bit more downside. Although the market down 700 points yesterday, anything is possible. Now, before we get into the nitty-gritty, I want to go into, where is my information here? 1 second here. Who moved my cheese? 1 second. There we go. So three major U.S. benchmark indices started the holiday shortened trading week on a sour note. And remember, volume was light yesterday too. Robust U.S. business activity data fueled investors' fear that the Federal Reserve could stick to aggressive tightening to tame inflation. In Tuesday's trading action, the S&P slid to a 3.5-week low. The Dow fell to a 1-month low, and the NASDAQ dropped to a 2.5-week low. The bond market, Treasury notes, not the bond market, Treasury notes reached a 3.25-month high. That's one of the reasons why I think we're about to do, because remember, the markets are mean reversion, and that's one of the reasons why I believe we're going to be going a little bit higher instead of lower, especially if there's no negative earnings news today. And we'll get into the earnings in a minute too. U.S. business activity unexpectedly rebounded to an 8-month high of 50.2 in February from 46.8 in January, pointing to resilience in the economy. Existing home sales fell to a 12-year low. 12-year low. That's bad. That's bad. Earnings front. Home Depot dropped 7% after the retail giant reported an unexpected drop in same-store sales and a grim profit outlook for 2023. Palo Alto Network climbed 8% after cybersecurity provided upbeat earnings. Go figure. It looks like there's a lot of demand for cybersecurity, which is one of the things I've been talking about quite a lot lately. Today, oh boy, we got TJ Maxx, NVDA, eBay. Actually, let's take a look at NVIDIA. NVIDIA could actually save a lot of the day today. It's up 0.47%. So it's up a little bit, nothing crazy. I mean, look at this. It dropped 3.5%. Now it's up 87. So it has a little bit of upside. Now, in terms of earnings, aside from NVIDIA, we have, let's see here. Aside from NVIDIA, and NVIDIA is expected to report negative 38%, which is not very good. Revenue down 21%. This is one of the best companies in the world right now. Bed Bath & Beyond, Cheesecake Factory. You've got Etsy, Extra Space Storage coming out, Garmin coming out, Lemonade coming out, Mosaic coming out. So you've got a lot of stocks coming out today. Pioneer Natural Resources is coming out today. Rent-A-Center's coming out today. TJ Maxx is coming out today. So a lot of stocks are coming out with earnings today. We're going to have another unforeseeable day. Now, as I mentioned to you before, if you look at the major sectors, and I want to go through the sectors really quick. If you go through the major sectors, you still see communication services, but behind it is financial and industrial. But the problem is this: if you look at the market action yesterday, you will see that this downside correction pressure was fairly broad-based. The only safety net I see right now is in consumer staples and possibly bottoming out in energy. But you got to be really, really, really cautious and very, 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 very careful right now as I speak. Now, looking at stocks. Now remember, today is Wednesday, and on Wednesday, I give you long stocks and short stocks. Long stocks, look at this stock. This is Progressive. Look how it's been moving. It made a peak at 143.91, and it backed off to 141. I think the stock is going to go higher. If yesterday's trading action couldn't undo anything to this stock, that's a pretty darn good stock. You may want to wait for it to go down to the 140 level, but I really, really like Progressive. To the downside, we've got NBIX. This is I think it's a biotech. Let me just make sure. Drug stock. Yeah, drug stock, neuroscience. It's definitely not Progressive. The stock has not been doing all that great, and it's making a 20-week low. It's trading below the 200-day moving average, and I genuinely believe this stock is going to go down to the $94, $95 level, which is where its support is. So to the short side, I like NBIX, and to the long side, I really like Progressive a lot. Now, before I let you guys go, and remember, be very, very cautious. I mean, look at the market right now. There's a good chance, there's a really, really good chance we're going to hit the 200-day moving average on the NASDAQ. A really good chance. And then go below and erase all of this. So you've got to start taking defensive positions. And just so you know, it may be a good time. It may be a good time to start looking at volatility. If volatility goes above the 200-day moving average, there's a good chance it'll go up to the 32, 34 level. So keep an eye on volatility near the 200-day moving average. Now, before I let you guys go, oh boy, I just discovered a very specific chart pattern that's helping me crack the code to the stock market, whether we're in a bull market or a bear market. The pattern has a historic 100% win rate over the past 5 years on some of the most explosive stocks in the market. And I'm getting ready to reveal how I trade this pattern and these companies in a free presentation that I'm doing tomorrow, Thursday, February 23rd at 1 p.m. Eastern Time. Click the link below, register for this event. Do it right now. Don't delay. Don't procrastinate. You definitely want to be there. And I'll see you guys later. And if you can't find this video in the Wealth Press site, go to the YouTube Wealth Press channel. It's there. I upload it every day. I'm going to upload it right now at 7:45. I'll talk to you guys later. Have a great day. Remember, comments, feedback, welcomed. And I want to hear what you guys have to say. Bye, guys. I'll talk to you soon.